This guy, in my opinion, absolutely rambles on 99% of his videos and gives zero indication on why you should buy these companies. So Stock Moe is a YouTuber with a hell of a lot of followers. It's a YouTube channel that I have heard of in the past, but I want to be clear, I don't really watch too much of my fellow YouTubers. I do watch the occasional 𝐂𝐄𝐂𝐋𝐔𝐒𝐈𝐕𝐄 or maybe even 𝐿𝐷𝑟𝑒 before he went crazy on Bitcoin, but Stock Moe for sure I have came across his videos in the past. And this video is titled 3 stocks that you should buy in China, or something of the sort. And of course, I am a big China bull, especially at these prices. Somebody in the chat room said this video is definitely worth a watch and it would trigger me. So here I am, reviewing Stock Moe, reviewing this video, and giving my thoughts on whether the 3 Chinese stocks he's picked are actually worth a buy. So before we start firing shots at Stock Moe, if you could do me the kind favor, make sure that like button is turned blue, and without further ado, let's crack on with this video. And speaking of 𝐂𝐄𝐂𝐋𝐔𝐒𝐈𝐕𝐄, big shout out to Starbucks.
Hi everyone, Stock Moe here. Today's video is for entertainment purposes only, and I want to start out a little different today with a shout out. There is someone out there, Matthew from Bishop Canevin in Pittsburgh, PA. I want to say thank you for watching this show. I heard you love watching it. You have a Tesla cat gave you a big meow out there to say thank you.
Is that a thing? A Tesla cat gave a big meow?
Thank you as well, but we have a person in common that we're friends with, and he said you were watching, and I wanted to give you a little surprise here and say thank you. If anything, I'll say you're going to do very well in life. Appreciate everything and watching the program, and hopefully we both make a ton of cash. Now today,
54 seconds for a shout out is way too long. Look, I'll give a shout out. Tony Pasquale, one of the longest serving chat room members and also a moderator there. Love you, buddy, and thank you very much for the support. See, 5 seconds. That's all you need. 54 is just too much. Your audience retention should massively be hit here.
We are going to be going over what is going on with the market. I got the best stocks to buy now based on the current situation, and one of them is
the best stocks to buy now. Something you will never hear me say, but I'm very intrigued.
Chinese play that I have had in my portfolio. I don't really talk about this one, so this will be interesting to see what everyone thinks about, and we're going to do some good things. But before that, of course, take a look down below, hit that subscribe button. If I have helped you out at all, if you've been coming here and you haven't hit it, takes 2 seconds, helps me out, and hit that like button, crush it. And then of course, I had the Webull link down below. You're going to get 2 free stocks today worth up to $2,300. All you got to do is deposit $5 or more, and you can get that. Take advantage of it. And of course, you never know. You got crypto and all kinds of stuff over there. I have my BlockFi link down below as well. You can get up to 250 in free Bitcoin, and they're paying interest, and they got the credit card that gives you back rewards in Bitcoin. And if you didn't watch my video from last night on how high Bitcoin and Ethereum is supposed to go, you're going to want to look into this. And then of course, come over and join me at the Patreon if you haven't. We have a private Discord, thousands of members, where we talk stocks, crypto, and just a lot of great things day in and day out, and how to maximize our portfolios.
Like, this is ridiculous. We've got an ad here as well. I mean, we've just basically had 2 minutes, and I hope my videos don't come off like that. 2 minutes of rambling. Yeah, probably my videos do come off like that. But yeah, don't listen to that, guys. Sign up with eToro down on the pinned comment. Deposit, make a trade, and you get lifetime access to the chat room, so you don't even need to go to my Patreon if you sign up with eToro, deposit, and make a trade. Let's crack on after this ad. And oh look, it's an eToro advert. Funny that.
So, as we can see right now, the market is down. Oh, did I almost say that? No, the market's up. Everything's up. Even the Russell's up, the Nasdaq's up, the S&P 500's up, and the Dow Jones is up. But are all my stocks up? No. We have Tesla, finally, and I have a huge position in Tesla, but it finally...
Huge position in Tesla. Please don't tell me he's still buying it though. Hopefully he's got a good average.
Started to you know, give those earnings reports where they absolutely dominated quarter to quarter, and what do we get? We get it dropping because everything dropped. And now you're seeing a nice 5% pop out of this, which is good. NEO popping nicely, 2.66. I said, you know, that 38 to 39 in one of the videos last week. I said, maybe this week, I said that, you know, if it drops, I would think that the 38 to 39 would be the bottom level. 40 to 41 would be one I wouldn't want to see it get below, but then I would think the ultimate resistance would be 38, 39. It did hit 38 and then did recover quickly. And now we're back up there into the, where are we at? 42.91 at this particular moment. So we're going to get into this a little bit. I do want to talk about the Hang Seng and just take a look
It's very straight around here that he's very much into his speculation plays. He loves his EVs. Again, not saying Tesla's not going to do well in the future. I mean, I've just heard about their robot. I think they're going to do very well, but yeah, man. I mean, right now, the big problem with Tesla, in my personal opinion, just quickly covering it, is a lot of people bought in very low, and I don't see many YouTubers taking any profits. I see them buying more, and buying a chart on the way up it's never a good sign long term. It just never is. It always sort of ends badly, and I know it's not financial advice that people are giving on YouTube because, you know, I'm just a bloke with a beard and that, but I think you should be buying a chart that's low, not a chart that's high. I mean, it just sounds basic in that essence. No matter what the company goes on to do in the future, I just can't buy a chart at all-time highs. It's very hard to do.
This. Now today it is up 3.3%. I have stated that we do have issues when we talk, and this is the exchange over in Hong Kong, for those that don't know, if you're looking at the future of trying to make a massive amount of money and taking advantage of some downturns. The US markets are very high. They're trading at all-time highs, so you can look around the world and find markets out there that are getting crushed. And I like to stick to economies that are growing, that are huge, and one of the biggest out there with the United States happens to be China. If you have not been watching, I highly suggest taking a look at the video I did a few days ago on the Chinese market and the opportunities. Is very enlightening, and you might just find yourself moving some of your money into some of these plays that could really take off based on how bad they've been beaten up. If you actually take a look at the Hang Seng over the last 6 months, you can see at one point this is where it dropped down. And what I say here, let's just take a look at how bad it's been over the 6 months from its high. And you can see it was down almost 20%. That's usually the mark you start to see some recovery down at that point for the overall markets. But
on what reasoning? I'm sorry, I just don't agree with that. The China situation is very unique, just on the fact that the Chinese government are coming out and putting out regulation, flexing their muscles because they're communists and they see the tech getting more power than the government. You can't really use normal indicators saying that an index, a stock, or anything will bounce at 20%. It goes on a lot of things: resistance, risk appetite, people pulling funds out, and I expect China to continue falling, and I hope it does. I really hope it does, so I can get more at a better entry. And if you want my thoughts on China, I'll leave them at the end, so make sure you stick around and smash that like button.
In the US, the Fed has come out and said, look, we're going to throw everything at it. We're going to spend trillions on stimulus. We're going to make sure all the money's easy to get to, keep interest rates low, and they're going to kick that can down the road. But when they do that, basically what they're doing is saying, hey, the market's going to be fine this year, and I'm already looking into 2022 to figure out where we're going with that and seeing if the market's going to be higher. I do expect to see the market higher next year. Now, is there a risk of a correction of some sorts? Absolutely. But how bad of a correction would it be? That's some of the things I'm looking into as well. Going over all the numbers, looking at a lot of the same things I'm sure a lot of analysts out there are looking at, engaging as the overall economy improves, unemployment and growth and all that good stuff. So we'll see as we move forward. Like I said, hit the subscribe button. It takes 2 seconds, and I'm going to give you good videos.
I'm sorry, but we're 5 minutes into the video, and we haven't really talked about the 3 stocks. The title of the video, top 3 stocks to buy now, news on China. We haven't had any inkling whatsoever. This guy is just rambling absolute horse, and it's starting to bloody annoy me. Just crack the fuck on, will you? Sorry. It's been a long day.
And I do have my teacher hat on a little bit today, but at the same time, I am going over some of the stocks. So
finally,
the first part of this is the Hang Seng, where I see it going and everything else, and comparing that to the United States markets. And like I said, you are seeing some opportunity here, and there are stocks you can buy in the US that match that, or you can go right through this, which I'm going to be talking about next week, which is going to be very interesting for a lot of people. If you're interested in taking advantage of some of these stocks, like I said before in the other video, I expect China not to allow IPOs in the US anymore in the next few months. I believe it'll be announced, and we'll have to wait and see. And if they don't announce that, they don't come out with an outright ban, I do believe that they'll make it so much red tape that you will see hardly any, if any, ever come to the US again to do their IPOs. They want to control the biggest companies in their country.
China's not stupid, America's not stupid. They both want to work together eventually. They're just flexing. That's all it is. As far as China IPOing in the States, it's going to continue at some point. It's just a case of meeting in a middle ground. The saying that China is never going to allow IPOs in the States it's absolutely idiotic in the long term. It might be a delay, it might be, you know, some more red tape, as he's saying. That might be the case. But saying it's never going to happen, I'm sorry, that's just plain out wrong. Plain out stupid and complete speculation. I mean, for all we know, in 5 years, the government could be completely different in China. If there's a revolution and, hey, it's communism, anything can happen.
Them there and not have them coming over to the U.S. There's a lot of money to be made with IPOs, and the U.S. usually handles that. And when that happens, and all these companies are coming over here, these companies are getting flush with cash. And so they want to keep them on the mainland or over in Hong Kong and have them do their IPOs over there. Hong Kong is a good international market where a lot of international investors do buy stocks through there. So that is something I am looking into. And like I said, I'll be rolling.
Yeah, he's right there. I mean, I'll give him that. Sorry, I might have bit his head off a little bit too early there, but he is right. I mean, the Chinese government would rather IPOs be in Hong Kong, but the problem is one, the currency risk, and as we know, majority of trades, majority of stocks, majority of money is over in the US exchange. I mean, it takes up the bulk, and by far the bulk of trades worldwide every single day. They can try and do it, but it'll never work. It really will. It will never work, and it will slow down Chinese growth, which will in turn hurt the economy. It's just not a viable option long term. I think dual listing will be the way forward, that you have to have your main listing, which sort of like a lot of companies are already doing in China. You have to have your main there, and then you can like sort of have a second listing in the States, which again, a lot of companies do. But maybe there'll be more regulation into how much of your company can be listed over there. Or it has to be a separate company altogether, maybe. Who knows?
Out at the beginning of the month in August to kind of help investors
7 minutes in, we still don't have a stock
from other countries off of different exchanges. Now, as we move forward, let's take a look at Alibaba. This is definitely one of the best stocks to buy now, in my opinion. If you've been watching a lot of the US stocks, you've seen that we've been at all-time highs, and they continue to roll up. If you look at some of these stocks based in China, you will see that you have Alibaba, which is 12.32% down in the last month. In the last 6 months, down 21.7%. If you remember back then, Jack Ma got absolutely in trouble, and he went missing for a while, and no appearance of him, no signs. All of a sudden he came back, but the stock's been getting beat up. And if you actually looked at when this was at a high, when before that all happened, right up here, 317.
Yeah, that Jack Ma disappearing thing was weird. There was like speculation that he'd been murdered by the government and all sorts of crazy stuff. But I mean, reality is the guy's a multi-billionaire. It's not unbeknown for them to go and, you know, go on a yacht or go and hide in the woods and do what they want to do. I mean, you've got to remember as well, it was sort of COVID. So, you know, the fact that you have a billionaire wanting to stay away from the public, that makes sense to me. I was never worried that Jack Ma was missing because, again, imagine the outright cry if something had happened to him and it was the Chinese government to blame. That's not going to happen. Don't think they were beaten up too much because of that. I don't think any logical hedge fund manager was thinking that was a reality either.
Stock is down right now 37.32%. They have a PE for this company of only 23 right now, which to me, this is an absolute bargain. I thought anything under 200 is a steal, and anything between 250 to 200 is a very good value play moving forward. And so we're still in that steal category, and we'll see how it goes.
What's Alibaba at now, just since this video? Just for some context, and I'm not saying that he's wrong here because I do agree Alibaba is a steal. Since he put this video out, Alibaba is currently at $157, so it's down a hell of a lot more since he brought this video out. And again, not blaming him because the Chinese government just keep coming out with more regulation, and the lower it is, the better. So far, I'm hoping that this guy comes out and starts talking about their cash flow, their free cash flow, their revenues, their dilution and things like that, because so far I think this guy's very chart based. It's down 30% on the chart, therefore it should be a bargain, and it's got a low PE. And if that is the case, you need to have a bigger look into their balance sheets before you can say this is a bargain. In my opinion, you need to look a lot more into their financials.
Goes from here on out, but this is definitely one. I'll show you the analysts out there what they think from Wall Street, and at the end of this video. The next one I have, of course, for the best stocks to buy now, in my opinion, is always going to be NIO. NIO is at that.
So where do I start with this? NIO. Look, NIO, Chinese company, EV company, not profitable. Financials are horrible, diluting the hell out of investors. Yes, it has $7 billion on hand, but its market cap is much more than companies like, Nissan. It's bigger than companies like Volvo, who are selling, and BMW, who are selling a lot of electrical vehicles and moving up fast. Yes, NIO has a lot of technology and it probably will sell more cars in the future, but it sold like 21,000 cars last year. If you're talking about Chinese plays that good value right now and you're looking at NIO, you're an absolute imbecile. There's no ifs or buts about it. If you're talking about Chinese stocks that good value and you're putting out a stock that has hardly fell because of this whole Chinese scam, NIO, I mean, think about it, right? China is trying to regulate companies that are listed in the US. They're trying to hurt them. NIO is a Chinese company listed in the US. And what's more so is NIO is backed by the Chinese government. To think that money will not be pulled out of this eventually from hedge funds is simply idiotic.
Price. And I had to throw this out there again. It's not like it's a surprise, but obviously this is suffering with a lot of other EVs out there lately. But over the last 6 months, down 24%. It came off that 60-something high that we had back February before the EV crash, all the way down to May 13th, I believe it was. Yep, May 13th. Then we seen the recovery up, but it was too much too fast. And then you had some profit taking. Now I hope we're in that next leg of moving higher to the next new high from this.
And to be clear, at the recording of this video, NIO is currently at $36.
High and getting back into the mid 50s. But a lot of drama came out of China, and that absolutely kind of slowed down. I thought we were going to hit it right here, but then all the drama came out of China, and then you've seen a lot of these stocks dropping. I think that's very, very temporary. I'm seeing meetings with the government in China, with some of the banking industry's leaders over there. That's telling me they realize that, hey, they need to calm this down. Money is flowing out of there.
Just realized, is he wearing a bowling shirt? Is that what you like lounge around your house in? It's a bit weird.
And that's not what they want. They don't want investors running. They want investors coming over. And what they're doing right now is causing some big time pain. And I think they're learning a lesson. And so when I'm watching some of these stocks that are based out of there, I do feel that things are going to turn the corner rather quickly, because that government doesn't want to see all the investors around the world pulling their money from their investments based over there, because that's the opposite of their goal. And so they have to figure out a way to just settle all that down, and that's why they're having the meetings and stuff. And I do believe you're going to see
It's quite contradicting. First, he said earlier on in the video that China wants to stop money being IPO'd in the States because money is being flowed out of China and listed over there. And now he's saying that they want to, be friends and hold hands with bankers and sort of work together because it's harming the Chinese economy. You see the contradiction there? I mean, maybe he agrees with me in saying that it's only a short-term thing, which I think maybe he tries to put across here, but I think it could be taken in wrong context, because he was very sort of contradicting with the Chinese government, but now when it comes to NIO, he's quite, favorable. Quite weird, that one.
More welcoming stance very, very soon for getting investments into these companies. The next one, though, if you want to stick with one of the best stocks to buy now and get that exposure into China, you got Tesla. And I'm going to explain this here. 40% of all their sales.
One of the best stocks to buy now. I give up. I physically can't listen to any more, I don't think, because if you're talking about, again, Chinese stocks that are undervalued, Tesla is definitely not one of them. Yes, they're selling loads of EVs in China, and they will sell more EVs in China, and Tesla will do well in the future. But just look at Tesla's market cap compared to their free cash flow, or even in their revenue. How much do they need to sell to justify their current valuation? How much of that is priced in? I think people are really sort of confusing what value is in terms of a company. When you buy a stock, it is forward looking. So it doesn't really matter. If Tesla sell 100 cars, let's say, and their current valuation is what it is. What is Tesla's current valuation? Let's check it out. So Tesla's current market cap is like 670 billion. And let's say they sell 100 cars, okay? It doesn't really matter if they sell 500 cars the next year. It doesn't mean you can 5x 673 billion. It doesn't work like that. That 500 cars in this example could already be priced in. It's a future looking price in terms of the stock price and the market cap of the company. You need to really understand this in terms of investing, because Tesla could grow, and it will grow, and it will sell more cars, and it will make robots and all the other lovely stuff, but how much of that value is currently priced into the stock? What's Tesla's free cash flow? Let's have a little look. So Tesla's free cash flow is like 4.5 billion and the company is valued at 600 billion. It doesn't make sense in terms of a fair valuation for the company. Now again, of course, they're going to make a lot more and have a lot more free cash flow in the future, but times this number by 20. Times it by 20, 25 if you're extremely bullish, and see if it's anywhere close to their market cap. I like to use 20, sometimes 25, times that by that and see where you are. Which if I times it by 20 means that that 4.5 would be like 90 billion US dollars. That's where I would be looking to buy Tesla. It's crazily overvalued if you're looking for a value stock. And if you're looking for a hype stock, yeah, that makes sense, but don't come off as if it's an absolute steal at these prices, because it's just not. Anyway, let's crack on with this guy giving out financial advice on the internet.
Come from China sales. So in case you don't want you want access to that growing market, which it is exploding over there, but the stock market's down 20%, which is crazy. That's why I said there are so many bargains to have over there. You're going to see me doing a few more videos on these. And if you don't buy them, I get it. If you just want to stick to your whatever stocks you like in the US, I get it. But I am trying to make sure we can profit as much as we can. And that means looking into markets in Canada, US, England, France, Spain, over in China, India. There are different places where they have companies that we can get access to some way, somehow, through ETFs and other means, that we can try to make some profit. And so I'm looking into those different things. And right now, though, seeing that market down 20% when the US is just rolling up tells me you're seeing a divergence there, that it's going to create some opportunity for us long term. Tesla is a way, though. If you want to stick with the home-based company that is expanding over there, you got Tesla. They reported outstanding numbers and they dropped. And this just blew my mind, just dropped down. And that was because of the overall market.
So he's put it in the video because it's a US company that's selling in China. Cool. Like, why not go with a different company like Apple? What? It doesn't make sense. Like, okay, I want a US company that sells in China. There you go. Apple. Next.
Drop. That was a steal at this point, and now from at 646, you're seeing it popping up big time today, and I think that's going to continue over the next few days, next few weeks, if not quarters, of having this hit that $900 or more by the end of this year, and we will find out. I think I'll feel better once it's back into the 700s, and then I'll feel really good by the 800s, but it should get up there to 900 by the end of this year. You're seeing days where it's going up $30-something a day. It doesn't take many of those days to get back up there. We just got to get those days to happen. And taking a look at the analysts out there, what they think Alibaba.
Look, I'm not listening to the analysts. Look, there's a big problem here because first thing, he's clearly bullish. I mean, if we look at this guy's channel, we can see that this guy is absolutely bullish as hell on EVs. I know this. I remember this guy actually halfway through this video. He was the one really touting Workhorse Group because they were meant to, basically Workhorse, it's an EV company. They were touted to get a big government contract for, I think it was the Postal Service or something like that. And I remember him saying that no matter what happens, even if they don't get this contract, he's not going to sell. And then I remember seeing another video somewhere on the internet saying that, well, he sold. And yeah, I mean, this is the problem with being on YouTube. I face it every day is, you know, you're going to be wrong. That's fine. But that's why I don't really say you should buy a stock. I always say, I'm not buying this stock because, or I like this stock because. Even if you go to my Alibaba videos, I say that I'm scaling in slowly and I pray to the gods it continues falling so that I get a better average. I'm not saying buy a stock and it's going to go to $900. Like, that's just absolutely insane if you want to say that you're not a financial advisor in other videos, which this guy does in some of his videos. You can't sit there and say, here's 3 Chinese companies that are absolute bargains right now. I agree with the Alibaba. I strongly disagree with the NIO and Tesla. I think NIO's going to get hit really hard soon because if they keep doing this to the US, China I'm talking about, then they can retaliate as well. And then we get back into this stance. I think the US right now has got a lot of stuff on its plate in terms of tapering and things like that. So China's sort of at the back of the queue. And eventually China will come to the front of the queue again. And then the US might give them a little slap. and that would be bad for Chinese stocks listed in the US and Chinese stocks over in Hong Kong. I do think NIO, though, has not really taken a hit yet. I think it was falling in line with the EV stocks. You can look at Tesla and compare it. And I don't think NIO has really been hit that hard in terms of if you look at the regulations. And I think that will come eventually unless companies like Alibaba, JD, PDD, these companies all go to the upside. Then there's a chance NIO will not have to sort of price in this regulation fear. It will happen at some point, one way or the other. And then you throw in Tesla and saying that, you know, if you want to buy an American company that sells in China, buy Tesla because this company is going to go to $900. I mean, it might well go to $900. I'm not going to sit here and give a price target. I buy value. I have a value that I want to pay for every stock. And that's my sort of area I want to buy in. And I hope it goes lower than the market valuation that I see on any said stock. I just told you, Tesla's free cash flow, that's one of the key things I look at. Times their average free cash flow over 5 years and times it by 2025. I just give Tesla the benefit of the doubt and did their rolling 12-month free cash flow. 4.5 times 20 equals 90, which means Tesla, if I wanted to buy it, I have to buy it around 90, maybe let's say 120, something around then it might become interesting. I don't think that's ever going to happen in full clarity. I don't think I'm ever going to be a holder of Tesla, but that's the difference. I buy value, he buys hype. So do I rate Stock Moe? Absolutely not. I think if you're following this guy, you need to be very careful. He's got a proven track record with things like Workhorse and other stocks where he says he's going to hold no matter what and absolutely breaks down into pieces of glass. This guy, in my opinion, absolutely rambles on 99% of his videos and gives zero indication on why you should buy these companies. We didn't talk about cash flow. We didn't talk about revenues. All it was is Tesla smashed their earnings and the stock fell. Okay, but why? Just ask yourself why. He doesn't tell you the answer. He doesn't tell you anything about the companies. He just says, it's basically like saying, look, I like the stock. You might as well go and get tips off Reddit. I'm sorry, but it is infuriating because people like me, there's other channels out there that do genuinely try and give out a little bit of help, a little bit of more indication, because after all, I'm just a normal bloke with a beard on the internet, but I might be further along than somebody watching this video. So all I'm trying to do is help everybody do as much due diligence as possible, and this was a complete waste of time. You might as well just do a video and say, here's 3 stocks I like in China. And by the way, one of them is not even in China. It's not a Chinese company. So that's my thoughts on Stock Moe. I know it's going to upset a lot of people, a lot of fanboys who like him, but if you don't like it, just don't ever come back to the channel. My beard and face is pretty much in every thumbnail, so I'm quite easy to avoid. If you want to support the channel, there is a Patreon link down in the description. We have a chat room and a WhatsApp group, and if you could make sure that like button is turned blue, and if you could drop the code word down below, which is Stock Moe, no. Drop that down in the comments and I'll see you in the next one. Take care. Peace.